Welcome back. You're still with us here on Markets Today. Well, let's run you through the rest of the headlines that we are tracking for you. Well, the fourth headline today, Zomato slipped in trade. It was down close to around 8% odd after the lock-in period for its anchor investors did end. Mangalam joins us to run us through more in terms of the stock move. Mangalam?
That's right. Zomato was lower in trade today as the anchor shares became tradable. The company listed about 1 month ago on the bourses on July 23rd, so exactly 30 days, and the anchor lock-in has opened up and the shares have become tradable. They raised almost 4,200 crores a month back at around 76 rupees a piece from the anchors. The issue price itself was 76 odd rupees. So that's telling you that nearly 55.2 crore shares, or roughly 7% of the company's overall equity, was held by these anchors. And the anchor investors, made a neat 72% over the issue price in just the last 30 days. So it is understandable that some of them may be looking to book that profit, and which is why the oversupply in the market causing this big decline in Zomato shares today.
Mangalam, thank you very much for that. The other one is HDFC Bank, which was up slightly after Parag Rao, the bank's country head of payments business, told CNBC TV 18 that it aims to issue 500,000 cards per month for the next several months, now that the RBI ban on issuing new credit cards has been lifted. The bank is confident of regaining its top market share position in that business. Listen in.
November, we had hit a run rate on incremental issuance of credit cards in excess of 300,000 cards a month in the month of November. So our immediate milestone, which we hope to hit in the next 2 to 3 months, so let's say a quarter, would be to hit that milestone. Immediately post that, our next milestone will be to hit 500,000 cards a month, and that we do expect to happen over the next 2 quarters. We've got, and I'll tell you how to do it. And obviously over the next 3 to 4 quarters, our clear aim is to regain the market share, the number market share, which we have lost. Admittedly, obviously, because we were not sourcing new cards, there was a little drop in our number market share, but I think we were very clear with our portfolio activity that we had a lot of focus on our value market share, and very happy to share that we did not lose. We actually held on to our value market share, notwithstanding the fact that we had embargo.
Well, turning attention to the telecom space then. TRAI released its telecom data for the month of June. The industry has added close to around 40 lakh subscribers. Rima breaks those numbers down for us. Rima, over to you.
Thanks so much for that. So let me run you through some of the key takeaways. One, the industry has added 40 lakh subscribers in the month of June. This is after it lost over 60 lakh subscribers in the month of May due to the second COVID wave. Reliance Jio has added the most number of subscribers for the 5th consecutive month. In the month of June, it added about 44.5 lakh subscribers. Vodafone Idea continues to bleed subscribers in the month of May as well as June. The company has lost on an average 40 to 43 lakh subscribers. So it's not good news for a company which is already battling a high debt problem. Bharti Airtel has rebounded. In the month of June, it lost about 46 lakh subscribers. So they managed to recoup a substantial bit, adding about 38 lakh subscribers. Taking note of the market share, subscriber market share, as it stands right now, Bharti Airtel has been steady at about 30% through 2021. Vodafone Idea has lost about 150 basis points of market share in this year, which has gone to Reliance Jio.
Rima, thank you very much for that. Just a word in on Adani Wilmar as well. The promoter company, Adani Enterprises, was in focus as SEBI has put Adani Wilmar's IPO in abeyance. The Adani Group told CNBC TV 18 that they haven't received any communication yet from the market regulator. Nigel.
Okay, all right. Well, finally, the fifth headline today onto a CNBC TV exclusive. The government is slated to announce the National Monetization Pipeline. Finance Minister Nirmala Sitharaman, the Vice Chairman of Niti Aayog, Mr. Rajiv Kumar, the CEO, Amitabh Kant, and secretaries of line ministries are expected to be present for the announcement. Anshu Sharma has been on top of that. She's joining in to give us a heads up on what's expected. Anshu?
Finance Minister in her budget speech in February had highlighted that monetization of public infrastructure will be an important financing option for new infrastructure construction. Now, she had also announced that pipeline will be launched and a dashboard will be created to track the progress. Now we here at CNBC TV 18 are given to understand that a pipeline of about 6 lakh crore has been identified by the government from FY22 till FY25, and the top 3 sectors identified for monetization are roads, railways and power. About 1.6 lakh crore of assets are identified from NHAI for over 26,000 kilometers of national highways. 1.5 lakh crore of railway stations, trains and railway tracks are identified from Railway Ministry. Now, about 67,000 crore rupees worth transmission lines from the power grid are identified for 32,000 crore rupees. There are hydro, solar and wind assets from NHPC, NTPC and Naval Ignite. Similarly, natural gas pipelines of GAIL are identified for worth 24,000 crore rupees. Product pipelines from HPCL, IOC for 22,000 crore rupees are also identified. Now, we are also given to understand that government plans to monetize from the non-core side as well. About 47,000 crore rupees with urban real estates assets are identified. Now, the top asset class includes toll roads, railway stations and transmission lines. We are also given to understand that the government would utilize this asset monetization funds for investment in the national infrastructure pipeline, where the investment of over 100 lakh crore rupees is expected. We'll have to wait and watch out for that announcement today. Back to you.
Anshu, thank you very much for that. Well, that also gets us to a close on this edition of Markets Today. From Nigel, me, the entire team here, thank you very much for staying with us. More coming up after a quick break.